Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Putra Hafidiniy bin Muhammad Fadzir Rustam 1192437, and today our group will present our financial ratio analysis, and our company is Nestle versus Spritzer. So let's begin with introduction. Nestle was founded by German-born pharmacist Henry Nestle in 1866 from Vevey, Switzerland. Nestle in Malaysia stretches back to 1912 when it was first founded in Penang as the Anglo-Swiss Condensed Milk Company. Since then, Nestle has been feeding Malaysians with high-quality brands and products, all while retaining the halal excellence and integrity. Nestle Malaysia presently employs over 5,000 people across the country and produce more than 500 halal certified products. Business nature of Nestle is marketing, distribution, and the sales, both locally and for export of sweetened condensed milk, powder milks, drinks, and liquids milks and juice, instant coffee, and other products. Some of their famous products example is Milo, Nestle, Nescafe, Kit Kat, and Bliss yogurt drink. Next, Spritzer. Spritzer was founded by Lim Kok Boon in the late 1980s. On 26 May 1993, in accordance with the Companies Act of 1965, Spritzer was established into Malaysia as a private limited company as Spritzer Sdn Bhd. Later, on 11 July 1994, the company was transformed into a limited company and took on its current name, Spritzer Berhad. The firm is currently listed on the Kuala Lumpur Stock Exchange's second executive board. Furthermore, the Lim family, which now runs the company, owns 46.6% of the firm. Business nature of Spritzer is manufacturing and distribution of natural mineral water, sparkling natural mineral water, distilled drinking water, carbonated fruit flavored drink, non-carbonated fruit flavored drink, functional drink, toothbrushes, preforms, and packaging bottles. Some of their famous products is Spritzer mineral water, tinge, and pop drinks. Next, we'll move to the content, which are ratios. There are 4 types of ratios that will be presented by 4 different presenters, which are profitability ratios, liquidity ratios, efficiency ratios, leverage, and market ratios. So I will pass to the next presenter, Aina Faqihah, for profitability ratios.
Hi, my name is Aina Faqihah, and I will be explaining profitable ratio. In calculating profitable ratio, we have to find gross profit margin, operating profit margin, and net profit margin. Okay, gross profit margin is to calculate the operation of remaining revenues after products and services are sold for sale and administrative expense and to produce profit. The formula used is gross profit divided by revenue times with 100. The higher gross profit margin proves the firm is better in controlling the cost of its stock and the manufacturing of its product. As we can see, Nestle able to generate 37 cents of gross profit for every 1 ringgit of its revenue, while Spritzer able to generate 67 cents of gross profit for every 1 ringgit of its revenue. Okay, next is operating profit margin. It used to establish the proportion of sales remaining available yield a profit after all variable costs. Before we calculate operating profit margin, we first have to calculate operating income, which is by dividing revenue with cost of goods sold plus distribution expense plus administrative expense and other expense. Operating profit margin calculated by divide operating income with revenue and times with 100. The higher margin indicates that revenue of the firm is more efficient in covering the operating expense, which makes the firm has less financial risk. Nestle gained 16 cents of operating profit for every 1 ringgit of revenue earned. Spritzer gained 11 cents of operating profit for every 1 ringgit of revenue earned. Okay, and then lastly, net profit margin. It is to evaluate the amount of income a firm has left after all operation costs and interest has been deducted. The calculation is by dividing profit before tax divide with revenue times 100 or divide profit after tax with revenue times 100. A high net profit margin indicates the capability of a firm to effectively control its costs and provide goods or services at a price significantly higher than its cost. Nestle earned a net profit before tax of 16 cents or for every revenue earned or a net of 12 cents after tax, while Spritzer earned a net profit before tax 11 cents for every revenue earned or a net profit of 8 cents after tax. Okay.
Sorry, Acap mute ke?
Okay, my name is Ahmad Ashraful Razak 1192414, and I will proceed with liquidity ratios. So there are 4 aspects of liquidity ratios that we have to take care about. So the first is quick debt liquidity. Second, inventory liquidity. Third, trade receivables liquidity. And the fourth, trade payables liquidity. So for the first one, the quick debt liquidity, this liquidity measures the company's ability to handle quick debts using liquid assets. So for there are 2 ratios that we use for measuring this quick debt liquidity. The first is current ratio, which is current assets over current liabilities, while acid test ratio with current assets minus inventory over current liabilities. So based on the table, Nestle for each ringgit of a current liability, Nestle have 0.6484 ringgit of current assets to pay off the debt, while Spritzer has 3.1520 ringgit of current assets for each current liability. This means that Spritzer has higher current assets than current liabilities, while the reverse or the vice versa happens to Nestle. And that also proven in acid test ratio, where Spritzer scores at 2.4456, while Nestle is still under 1.0. This means that Nestle is in short of current assets or liquid current assets to pay off its quick debts. So next, we will proceed with the inventory liquidity. Inventory liquidity measures how many times a company has sold and replaced its inventory during a certain period. So there are 2 important aspects. Firstly, inventory turnover ratio and inventory turnover days. For the formula, inventory turnover ratio uses cost of goods sold over inventory, and for the days, inventory over cost of goods sold might multiply by 365 days. So based on the table, Nestle have an inventory turnover ratio of 6.24 to 1, and Spritzer have a ratio of 2.88 to 9. This means the value means how often the company have sold and replaced its inventory. So for the inventory turnover days, Nestle have a process of selling and replacing stocks for an average of 59 days before another process starts. While for Spritzer, it takes a quite longer days, which is 127 days. The higher the ratio, the more demand that existed for the product. Hence, it is sold and replaced more frequently. While the shorter the days, the less it takes for the stocks to be sold and replaced. What does this mean? This means that the product has a higher demand. So we will proceed with the trade receivables liquidity. The trade receivables liquidity is function to measure how well a company is able to collect the debt from other firms and avoid bad debts. It also depicts how well a company communicates with its debtors to collect more and more debt before the due date. So the formula for the account receivables turnover ratio is credit sales over account receivables, while for the account receivables turnover days, it is account receivables over credit sales multiplied by 365 days. Based on this table, we can see that Nestle managed to collect its debt from other firms for 10.8603 times for a certain period, which is a year, while Spritzer only collect as frequent as 5.3009 times for the year. While for the turnover days, for Nestle, each debt collecting process took an average of 34 days only before another process starts. While for Spritzer, it takes more than 2 months, which is 69 days. From these tables, we can see that the higher the ratio, the more capable the company is to collect its debt from other firms, such as Nestle. While the shorter the days, the less it takes for the company to recollect its receivables. Now, we will move on to the last part of the liquidity ratio, which is trade payables liquidity. Trade payables liquidity measures how well a company is able to pay the debt to other firms. And for the account payable turnover ratio, we will calculate credit purchases over account payables. And for account payables turnover days, we will calculate account payables over credit purchases multiplied by 365 days. So, based on the table, we can see that Nestle managed to pay its debt from other firms for 2.6067 times for a year, while Spritzer managed to pay its debt to other firms for 3.7798 times per year. And now we can see that from the account payable turnover days, each debt collecting process took an average of 141 days before another process starts, while Spritzer only takes less than that, which is 97 days. So we can say that the higher the ratio, the more capable the company is to pay its debt to other firms, while the shorter the days, the less it takes for the company to pay its debts. With that, I would like to pass to the next presenter, Madihah Binti Solahuddin.
Hi, my name is Madihah Binti Solahuddin. My metric number is 1193173. I'll be presenting on the leverage ratios. There are two types of financial measures in leverage ratios, which are debt ratio and interest cover ratio. For debt ratio, we want to look at how the business is financed. So for Nestle, we can see that 75.61% of the Nestle company's total assets are being financed using both long and short-term debt. So this we can say that most of the assets in Nestle business are financed through debt financing. But in contrast, for Spritzer company, there is only 16.76% of Spritzer's total assets which are being financed through debt. So we can conclude that Nestle's company utilizes more portion of debts compared to Spritzer. Next is the interest cover ratio. We want to look at what is the capability of both companies in covering their interest charged on the borrowings. So we can see here that both companies are generating satisfactory amount of revenues to fulfill the interest expenses incurred. And we can see that Spritzer has a very large interest cover ratio, which is 60.08 times. So we can say that Spritzer is much more efficient to continue servicing the interest if the interest rate were to slightly increase in the future. So by that, we can say that the level of interest rate risk faced by Spritzer is lower compared to Nestle. Thus, there may be more room for further borrowings in the future. Next, we want to look at the market ratios. So in market ratios, there are two types of ratio, which is PE ratio and also market to book ratio. For PE ratio, we want to look at the price earnings ratio. So we can see that the PE ratio standardizes the companies with varying prices and earnings. And when a company is having a high PE ratio, for example, Nestle company, so we can say that the company is usually considered to be growth stocks, and the investors will be ready to pay a higher price for future growth stocks. We can also say that these growth stocks have a greater level of volatility. Next is a market to book ratio. In this ratio, we want to see what is the actual price of the company, whether it is expensive or not. So for both companies, the stocks are overvalued. So this means that the investors are ready to pay more for the company than its net assets are worth. And the companies expect to make a profit in the future, and the investors are ready to pay a premium for that possibility. So since Nestle has a very high market to book ratio, we can say that Nestle company is very expensive compared to Spritzer. Next, I will pass to Putra Hafidiniy to explain on efficiency ratios.
Thank you, Madihah. Thank you, Solahuddin. In efficiency ratios, there are 4 different calculations that are proving a company's efficiency, and they are earnings per share (EPS), return on capital employed (ROCE), return on asset (ROA), and return on equity (ROE). So let's start with earnings per share (EPS). Earnings per share, this measure tells the portion of the company's earning that is distributed to each individual share of the equity. Hence, it is notably important to the investors and the people who trade in the stock market. As you can see, earnings per share can be calculated by earnings attributable to ordinary shareholders divided by number of ordinary shares in issue times with 100 cents. As you can see in the table, EPS of Nestle is 286.96 cents and Spritzer is only 14.88 cents. Every ordinary shareholders of Nestle have earned 286.96 cents of income, and shareholders of Spritzer have earned 14.88 cents only. The higher the company's EPS is, the more profitable it is. Nestle is more efficient compared to Spritzer because of higher EPS through the year in the 2019. Next, we proceed to the ROCE. To evaluate the profitability and capital efficiency of a company, in other words, the ratio can help you figure out how well a company is making money off its capital. So ROCE can be calculated by earnings before interest and tax, EBIT, divided by capital employed times with 100%. So percentage of ROCE of Nestle is 85.43% and Spritzer is 9.57%. Every 1 ringgit of funding provided, the firm is able to get a return annually on average for Nestle is RM 0.8543 and Spritzer is RM 0.0957. A higher ROCE suggests that a larger portion of the firm's value may be given to stockholders as profit, as well as the larger portion of profits can be reinvested in the company for the benefits of shareholders. Since a higher ROCE is more profit-making, Nestle is more efficient compared to Spritzer. Next is ROA, return on assets. ROA is measures of a company's profitability in relation to its total assets. ROA tells a manager, investor, or analyst how well a company's management is utilizing its assets to generate profits. ROE can be calculated by profit after tax divided by total assets times with 100%. So ROA of Nestle is 24.68% and ROE for Spritzer is 6.26%. Every ringgit of assets that is made available to the firm or that the firm invests in, the management of Nestle and Spritzer can generate a return after a tax of RM 0.2468 for Nestle and Spritzer is RM 0.0626. The higher return on assets shows the company have more asset efficiency to generate income. Therefore, Nestle is more efficient to Spritzer. Lastly is ROE. ROE is a financial performance indicator that is computed by dividing profit after tax or net income by shareholders' equity. ROE is a measure of a company's profitability in a relation to its stockholders' equity. There are several measures of ROE in point of view of all shareholders. Therefore, the formula is as shown as in the table, profit after tax divided by total equity times with 100. But if we are seen from the point of view of ordinary shareholders only, then it should be written on ordinary equity, which is the total equity must be subtract with preference shares. However, Nestle and Spritzer did not use any form of preference share. The return on equity and return on ordinary equity is the same for both firms. The ROE for Nestle is 101.20% and Spritzer is 7.52% only. Nestle has high value of ROE even more than 100%. This can happen of variety of reasons, but one way to have a high ROE is if the shareholders' equity is low. Which can happen if the company's capital has been reduced by past losses. A higher ROE is normally preferable, but a lower ROE may imply that equity capital is less efficient. Since a Nestle ROE is higher than Spritzer, therefore Nestle is more efficient compared to Spritzer. I think that's all from me. I will pass back to the Madihah Solahuddin.
Okay, for conclusion, there are three major issues that will be discussed. The first one is the likely future general financial condition, the ability to further grow and be more efficient in generating future returns, and also our suggestion on a company to invest in. For the first one, so when we want to look at the future general financial condition, we look at the capability of both companies in paying their debts. And we found out that both companies are able to pay their debts. It's just that Spritzer asset test ratio is higher than Nestle. This means that Nestle has a very low asset test ratio, meaning that its current assets is lower than current liability. So we might say in general that Nestle is not capable of paying its current liability. But actually, there are three aspects which makes Nestle can actually pay its own current liabilities, because it does not depends on the current assets alone, because the inventory turnover ratio for Nestle is very high, and also the account receivables turnover ratio is also very high, and the return on assets is also high. So these three inflows streams helps the Nestle company to pay off their current liabilities. So we might say that Nestle has a better next. So we can say that Nestle is likely to have a general better financial condition compared to Spritzer. Next, the second one is we want to have a look at the ability for both companies to further grow and be more efficient in generating future return. So to view this issue, there are three different perspectives that we can analyze. The first one is the condition of the company operating financial management. The second one is the funds dependency. The third one is the returns generated by both companies. Why? Because we can say that a very excellent operating financial management is very important, since the company operations activity is considered as the backbone to the company. And for the first perspective, actually both companies excel in the operating financial management. So we can say that both companies would be stable in the future years. And then the second one is the funds dependency. We can say that Spritzer is over-relying on equity. When they are over-relying on equity, they prevent their growth opportunities in order to stay ahead and be proactive than its competitors. And also, when they over-rely on equity, they miss the opportunity to have tax deductibles, because tax deductibles are only applied when the company pay their interest charged. The last one is the returns generated by both companies. The company is ought to safeguard. It is generating high income, since with high income, the company can pay its debt off and further creating large profits. So based on this analysis, we can say that Nestle has more ability to further grow and be more efficient in generating future returns. Next is the third one. The third one is our suggestion on which company to invest in. So we have already seen that Nestle has a more stable financial condition in the near future, and Nestle also has a brighter chance to grow further compared to Spritzer. Hence, it will be more efficient in terms of generating future return. But when we want to talk about investing, we must consider the risk. So we can say that Nestle is a very high risk stocks, has a very high risk stocks, but it is believed that the earnings gained from Nestle stocks will be high in the future and it worth the investment. So as a conclusion, we can say that this board of directors suggests that our company invest in Nestle company. That is all from our presentation, and we would like to thank you.